This EV penny stock is set for a big 2023 with another huge year projected in terms of growth and global expansion. In this video, I will be discussing Polestar, an EV stock that has been beaten down over the past 6 months, but this company is miles ahead of its rivals in so many ways. So today I will be looking at the financials that have just been released, I will look at the near future prospects, and I will be looking at the charts too. I will look at the risks involved and talk about something that a lot of people seem to have missed. The last time that I made a video like this about Polestar was just days before the stock ran up nearly 100%, so stick around, you will want to know this. This could be the most important 12 minutes of your day. So if you enjoy my videos and want me to keep creating regular updates, then can I ask you to smash the like button and subscribe to the channel if you're new. I'm aiming to get 200 likes again on this video, help me achieve that goal, and turn on notifications to make sure you don't miss out on any new content. Once a week, I give viewers a chance to vote on what video they would like to see next, so check this out and have your say on what video you would like me to make in the next few days. Now let's get straight into this Polestar video. Shares of Polestar have lost more than half of their value since the company completed its SPAC merger in June 2022. This is largely because investors are now less willing to pay inflated valuation multipliers for EV companies, especially those that are still losing money. Just look at major EV stocks like Lucid, for example, or Rivian. These stocks are down well over 60% in the past year and down about 20% in the past month alone. These companies are still many years away from profitability and have an incredible cash burn. Then you have Polestar that is miles ahead of these companies, and Polestar has a reasonable chance to be profitable in just a few years' time, and revenues are projected to ramp up nicely over the next 2 years. Polestar is expected to generate over $5 billion in revenues in 2023 and over $11 billion in full year 2022, implying a top-line growth rate of over 100% per year. Polestar's prospects in the EV market are currently valued at full year 2023 price to sales ratio of about 2.3x. This far exceeds that of Lucid and Rivian and nearly every other growth EV stock on the market. While other EV companies are significantly cutting their future guidance numbers or are recalling models that have already been sold, Polestar is going steady with its growth both in terms of production, deliveries, and in terms of global expansion. Polestar now has operations in more than 35 countries worldwide and continues to grow at a huge rate. But of course there are some risks. I will talk a little about this now, and I will look at this in more detail in a moment. This is important information to be aware of whether you are a Polestar investor or a potential investor. So like all other EV companies with lofty delivery projections, the two biggest risk factors for Polestar are the production ramp of Polestar's various EV products as well as the valuation factor. Polestar is still not profitable, which is also a risk, but the EV company is moving rapidly towards break-even, which in itself could be a huge catalyst for shares of Polestar. So Polestar's latest earnings report that was released this week shows the huge progress that the company is making. Total revenues of $2.5 billion in 2022, which is an increase of 84% year over year. 51,000 cars delivered in 2022 compared to 28,000 in 2021, an increase of 80%. And cash equivalents of nearly $1 billion as of December 31st. As we can see here, clearly in the key financial highlights, their revenue is increasing at a higher rate than the cost of sales, which has led to a hugely increased gross profit of $119 million for 2022, which gives a gross profit margin of about 5% compared to just 0.1% for the previous year. Now importantly, the operating loss has increased for the year, but this is largely due to this listing expense, which is a non-recurring, non-cash, share-based listing charge incurred in connection with the business combination with Gores Guggenheim back in June 23rd, 2022. And you can see here the individual increases and decreases, but the most important of these is that revenue is increasing, demand and sales is increasing, while costs are decreasing, and the adjusted operating loss has decreased by over $80 million. Now I have spoken about this before, and this is the most obvious important point for any growing business. When their revenue increases, margins need to improve, operating profits and losses also need to improve. So we have just seen that the gross profit margin has improved from only 0.1% up to nearly 5%, which is fantastic. But the operating loss decreased by nearly 10%, which shows that Polestar is well on its way to achieving break-even in the near future. Now, I highly recommend to anyone to read through this earnings report in detail because it is hugely detailed, but I am going to skip right down to the future guidance. So Polestar has added 8 new markets since the beginning of 2022. The United Arab Emirates, Kuwait, Hong Kong, Ireland, Israel, Italy, Spain and Portugal. And Polestar has 158 retail locations and over 1,100 service points across its markets, which is up 55 and 305 respectively since the end of 2021. Now show me another EV company that has a global footprint like this. Only Tesla can compete with Polestar in terms of its global exposure. Tesla, a company that is valued at about 200 times what Polestar is valued at. So Polestar is still very lowly priced in comparisons to all of its major rivals, despite being so far ahead of them. And the outlook for 2023 shows that progress, but it also shows that management are being very prudent. As previously announced, Polestar anticipates global volumes to increase by nearly 60% to approximately 80,000 cars, predominantly driven by Polestar 2 sales. Now, Polestar had expected sales of about 120,000 for 2023 not that long ago, and despite hitting all of their targets so far, management are targeting 80,000 in 2023. Now, this is a figure that I feel is extremely achievable. Don't forget that Polestar ramped up sales in Q4 2022, where they managed about 30,000 deliveries in one quarter. So with vehicle sales usually peaking in the first months of any given year, I think that their Q4 figures were very impressive, and I am expecting Polestar to easily exceed their guidance for 2023. And as we all know, exceeding guidance, exceeding expectations usually drives share price upwards, and I expect this to happen both in the long term and in the medium term. Secondly, the company expects gross margin to be broadly in line with 2022, with volume and product mix supporting margin progression later in the year. Now understand this point. They have not said that they expect gross profit to be in line with 2022, they expect the margin to be in line with 2022. That is a margin of 5%, but they are expecting sales of about 60% more in 2023. So if 2022's revenue was 2.4 billion, Polestar are expecting revenue of about 4 billion for 2023. And a gross profit margin of about 5% would give a gross profit of about $200 million. Which is significantly above the 2022 figure. But Polestar should also continue to manage costs more efficiently again, and therefore reduce their operating losses hugely in this coming year. But again, they will not achieve profitability in 2023, so hear this well. Although I am bullish on Polestar in the long term, they are still a long way away from being a profitable company. I think most people seen headlines like this one late last year. Polestar posts first profitable quarter, and then they jump to the conclusion that Polestar has gone from loss making to profit making, but this is not the case. Now, I spoke about this in detail in previous videos that I did back in November, where I also called the bottom on this stock at about $4.50. And I also spoke about all the biggest risks for this stock. Check out this video here for a real view of the positives and negatives of Polestar. There is a link to this in the description below. And if you want to discuss anything about Polestar with me, then check out the Discord group. This is completely free, and you can ask me my opinions about Polestar or any other stocks. And the last point from this earnings report is again very important. As I said a moment ago, Polestar is still a long way away from profitability, and as such, while liquidity has strengthened, including a cash balance of approximately $1 billion as of December 31st, the company continues to explore potential equity or debt offerings to raise additional capital to fund operations and business growth. So realistically, I think that although Polestar has enough cash for 2023, I do expect to see either dilution or a funding deal from the parent company Volvo at some point during the year. Now, although this does dilute shareholders, it will be necessary for the long-term growth, and the partnerships with Volvo and Geely Automotive actually strengthen Polestar's value due to the fact that they will always have the support of these companies if they need it. Now, looking at the charts, we can see the decline that the stock has had over the past 6 months, but there is also some important indicators here. I have circles here in green. This is where I call this at bottom all through November when the stock was around $4.50, just before it rocketed up to nearly $8. Check out the videos that I made from November to see exactly why I knew this would happen and how I picked out the indicators that this was about to happen. It's well worth a look. At most, you might spend 15 or 20 minutes watching these videos and you might learn something about how to spot these huge breakouts before they happen. Importantly, in the short term, we are seeing a wedge forming, but there is other important information here too. Consistently since November, we are seeing higher lows, as indicated here, and the RSI is also moving upwards right now, so we should see some upward movement in the short term. However, I expect a big breakout move in the next few weeks. So guys, what do you think of that? Are you still bullish on Polestar in 2023, or do you think that there is a better EV play in the market? If you enjoy my videos, then help me stay alive on YouTube and smash the thumbs up and subscribe to the channel if you're new. Drop a comment below and let me know your thoughts. Also, I only took a quick look at the charts in this video, but I have been asked many times to cover more technical analysis in my videos, so what do you think? Should I look at the charts in more detail in future, or should I focus more on the upcoming catalysts or fundamental analysis? Let me know your thoughts in the comments below. And remember to vote on what video that you would like to see next. As always, I do try to respond to all comments, and whatever is voted for, I will make a video about. And if you are not a member of the Discord community, then check this out. There's a link in the description below where you can talk to me and tell me what you think of any stocks or ask my opinion on those stocks. Anyways, thanks for watching and I'll catch you in the next video.